Hello dear viewers, hope you all are doing well. Welcome to Revision Time. In our previous video, we have studied about journal. We have studied about how journal is the book of primary entry, the book of original entry. Because every transaction in every business enters the transaction in chronological order in the journal. That means as and when the transaction, the event has been occurred, it is recorded in the books of accounts, which is a journal. And from the journal, the transactions are posted into ledger and then various financial statements are prepared. So journal is referred as a book of original entry or a primary book. So we had also looked into the format of journal, which was 5 columns: date, particulars, we had ledger folio, debit entry and credit entry. With that, we had taken few of transactions, examples, tried to analyze the transaction and posted and then recorded them into a ledger. Today we will be taking few more examples and solve the problems and analyze the transactions and record them into our journal. So let's get started. So first question, journalize the following transactions in the books of Himanshu. That is, we will read out the question first. On December 1, business started with cash 75,000. December 7, purchased goods for cash rupees 10,000. December 9, goods sold to Swati rupees 5,000. December 12, purchased furniture 3,000. December 18, cash received from Swati in full settlement 4,000. December 25, paid rent 1,000. And last, December 30, paid salary 1,500. Before we start to record these transactions, I want to just bring to your notice about few of the transactions and how to analyze those transactions. First is, there are two types of transactions, that is cash transaction and an asset transaction. So when we read out the transaction, we understand that it is for cash. Correct? Like we can tell, goods bought for cash rupees 50,000. When word cash is mentioned in the transaction, then it is to be understood that cash account is to be considered. When can we know that the transaction is a credit transaction? Here the identification is name, the name of the person or the name of the firm. For example, goods bought from Mr. Swati, as we saw in our example, Mrs. Swati, rupees 10,000. Here there is no mention of cash, whether we have received cash, no. So here the name of the person is mentioned. This is termed as a credit transaction. When the word cash comes into the transaction, when the word cash comes into the event, it is to be termed as cash transaction, or else it will be a credit transaction. Also, there is a possibility that the transaction may be goods bought from Mrs. Swati for cash rupees 10,000. Here both name also is there, cash also is there. But when we read, it is clearly understood that it is bought for cash, so cash account comes into consideration. Next is about goods. When the word goods is mentioned in the transaction, now when we speak of goods sold for rupees 10,000, goods purchased for rupees 10,000, when goods is to be mentioned in the question related to sales or purchase, the sale or purchase account come into consideration. We cannot write goods account. When goods is given, we have to understand whether it is a sale or purchase from the business point of view, and we have to take that account into consideration. We cannot write goods account. Next, there is possibility that we can come across transactions like paid salary rupees 10,000, paid rent rupees 25,000, paid commission rupees 20,000. When such transactions we come across, it is to be understood that it is a clearly cash transaction. There is exchange of cash, so cash accounts come into consideration. When only it is a short transaction, salary paid, rent paid, commission paid, so cash account comes into consideration. When purchased asset, purchased furniture for 10,000, purchased building for 1 lakh, when the asset name is given, we have to consider the asset name for the journal entry, like furniture account, building account, machinery account. So these are few of the points which you have to remember to start recording the journal. Now we will look into these transactions. Imagine this transaction from the business point of view, understand whether the cash is coming into the business, whether the asset is coming into the business or going out of the business, and accordingly we will record our transactions. So our first transaction took place on December 1, that is business started with cash 75,000. Yes, now business started with cash. It means that cash and capital. We start business with cash, which is known as capital for the business. So here our cash account and capital account come into consideration. Now we know cash account is into real account. Cash account is a real account. And we also know capital account is a personal account. Now, when we think from the business point of view, business started with cash 75,000. With cash, the cash is coming into the business, and our real account rule is debit what comes in, credit what goes out. So cash account is debited. Capital, personal account. What are the rules of personal account? Debit the receiver, credit the giver. The person Himanshu, it will be Himanshu's capital account. It will be more easy for you. So Himanshu's capital account, it is related to a person, so it is a personal account. Since Himanshu is the giver, it will become a credit entry. So we will post it in our ledger, that is cash account debit. Credit entry is specified as to Himanshu's capital account, that is 75,000. So we have to write a narration about this. You can write same whatever it is given in the question, being business started with cash. Our next is of December 7. Okay, purchased goods for cash rupees 10,000. Here we are purchasing goods. The asset name is not mentioned, goods it is mentioned, and we just saw that when goods is mentioned, we have to understand whether it is a purchase or sale, and accordingly we have to take the account into consideration. Here we are purchase goods for cash. So purchase account, our purchase account comes into nominal account because our nominal purchase is an expense, and our nominal account speaks of debit all expenses and losses, credit all incomes and gains. Here our entry clearly tells us that for cash, so cash account, and we know cash account is a real account and our real account. Okay, now purchase is nominal account. What are our nominal account rules? Debit all expenses and losses, credit all incomes and gains. Purchase is the expense, so this is our debit entry. Cash account is a real account, and when we are purchasing something, we pay the cash. Cash is going out of the business. So from real account point of view, debit what comes in, credit what goes out. Cash is going out, so this will be our credit entry. Here it will be purchase account debit to cash account, amount of rupees 10,000. So our narration will be being goods purchased for cash. Next entry, next transaction we have on December 09, 9th of December. What we did here, sold goods to Swati 5,000. Yes, when we just looked into the points, we saw that when cash comes into the transaction, cash account is to be taken into consideration. Now, name of the person is given. If you have observed, name of the person, here I'll highlight it for you. Sold goods to Swati rupees 5,000. Now we are selling it. There is no mention of cash. So it is a credit transaction. That is here sales account and Swati's account are affected. So what is our sale? Sale comes into nominal account because it is the income, and Swati is a person, comes under personal account. Okay, sale. What is our sale from nominal account point of view? Debit all expenses and losses, credit all incomes and gains. So our sales are always credited. Correct? Who is Swati for us now? Debit the receiver, credit the giver. Since for Swati we are selling the goods, from the business point of view she is receiving the goods. So she is debited, her account is debited. So Swati's account debit to sales account rupees 5,000. So our narration will be same, being goods sold to Swati on credit. Next, purchased furniture rupees 3,000. Here it is very clear we are purchasing, and we are purchasing an asset. So we just saw that when the asset name is given, we have to consider the asset name only. So furniture account comes into consideration. Purchased furniture it is given, so it is very clear that it is purchased for cash, like we have paid rent, paid salary. Okay, now so our assets and liabilities all come under real account. So furniture is a real account. We know that our cash account comes under real account. Next, under furniture we are purchasing the furniture, and under real account, debit what comes in, credit what goes out. Furniture we are purchasing, this is coming into the business, so it will be debited. Cash we are paying to bring that furniture, cash goes out of the business, this is credited. This entry took place on December 12. Furniture account debit to cash account rupees 3,000. So being purchased furniture, just whatever is the transaction, we can write down the transaction as the narration, but the narration must start with the word being. What is the point behind mentioning this narration is that let the business or the business owner know why this transaction had taken place, what was the event of this transaction. So with that point of view, we just mention a narration to keep in to understand why this transaction had taken place, whether it was credit transaction, cash transaction, with whom the transaction had taken place. To understand that, narration is mentioned. Next, 18th December, cash received from Swati in full settlement 4,000. So here we are receiving cash, so cash account. We are receiving from Swati, so Swati's account. We know cash is a real account and Swati is personal account. Cash account, we are receiving the cash, debit what comes in. Personal account, Debit the receiver, credit the giver. She is giving us the money, so she will be credited. Now, this transaction took place on December 18th. Cash account, debit to Swati's account, 4,000. Instead of paying 5,000, she paid us only 4,000. Here being the narration, it will be being cash received from Swati in full settlement of her account. Next transaction we have on December 25th, that is paid rent rupees 1,000. We just looked into the points that when paid rent and all everything is there, it is to be of cash account. So cash account, it is paid in cash, so cash account and rent account, correct? So we are paying cash, which before that cash account is the real account, and rent account, rent is our expense, it is nominal account. Under real account, it is paid, we are paying the cash, so cash is going out of the business, so debit what comes in, credit what goes out, it is credited. Under nominal account, rent we are paying, so it is an expense to us, so debit all expenses and losses. So it will be, our entry will be rent account, debit to cash account, debit entry is of 1,000, credit entry is of 1,000. Narration, being paid rent. Next, our transaction is on 30th December, paid salary. Same salary also will be same effect. Salary account will be affected. Another one, we are paying it in cash, so cash account will come in effect. We know cash account is real account, salary account is nominal account. Because we are paying here, it is an expense to us, so it is debited. Money is going out of the business, cash is going out of the business, it is credited. So salary account, debit to cash account. Value is 1,500. So being salary paid. This is, so we have completed all the entries. This is how we have to analyze the transaction from the business point of view, understand whether it is an expense, gain, asset, liability or a person's account, and then put the rule, apply the rule, then understand about credit or debit entry. This is how we have to record our journal entries, and the last step will be total of all the credits, that is 99,500 and 99,500. So this is the solution to our journal entries. So let's look into our second question. Let's read out the question first. Enter the following details in journal of Mudit. Jan 1 commenced business with 1,75,000. Again on Jan 1 purchased building 1 lakh. January 2 goods purchased for cash 75,000. January 3 sold goods to Ramesh 30,000. Jan 4 paid wages rupees 500. Jan 6 sold goods for cash 10,000. Jan 10 paid for trade expenses rupees 700. Jan 12 cash received from Ramesh 29,500, discount allowed 500. Jan 14 goods purchased to Sudhir 27,000. Jan 18 cartage paid 1,000. Jan 20 drew cash for personal use 5,000. Jan 22 goods used for household 2,000. Jan 25 cash paid to Sudhir 26,700, discount allowed 300. Let's quickly start recording our transactions in the books of journal entries in the books of Mudit. Okay, Jan 1 we know commenced business with cash. Cash account is debited and Mudit's capital account is credited for rupees 1,75,000. 1,75,000. Being commenced business with cash. Next event took place on Jan 1, purchased furniture. So when we are purchased building. Building is an asset and we are purchasing it for a cash. We know that building, here it will be building account debit to cash account for 1 lakh rupees being purchased. Next, on Jan 2, we have goods purchased. So, here it is purchase account debit to cash account because we are purchasing it for cash, rupees 75,000, 95,000. Credit and debit entry being goods purchased for cash. Next entry on Jan 3, that is sold goods to Ramesh. Since there is no mention of cash, it is a credit entry. So Ramesh account debit to sales account for rupees 30,000 being sold goods to Ramesh for credit. Next, Jan 4, paid wages. So we know wages account comes into consideration. We are paying it in cash. So cash account, but we know cash account is a real account and wages we are paying. So it's an expense and expense comes under our nominal account, and in nominal account expenses are debited. Cash real account we are paying, cash is going out of the business, it is credited. So wages account debit to cash account for rupees 500 being wages paid. So our next entry is on from here Jan 6, that is sold goods. We know cash account, debit to sales account for rupees 10,000 being goods sold for cash Next, paid trade expenses. Again, trade expense comes under our nominal account, and expense under nominal account are to be debited. We are paying it in our cash. Cash is real account and it is credited. So the transaction is of Jan 10. Trade expense account debit to cash account for rupees 700 and 700 being trade expenses paid. So next question is cash received from Ramesh 29,500, discount allowed 500. So we know we had purchased, here is the transaction. I'll highlight it for you. We had sold goods to Ramesh of rupees 30,000, but now Ramesh is paying us the cash, but he is paying us only 29,500 and we are allowing him discount of rupees 500. How to record this transaction is, what all accounts come into consideration? Let us take that first. First, cash we are receiving. So cash account, we are receiving it from Ramesh for the sales we did, Ramesh account, and we are giving him discount. Discount is allowed here. So discount account. Now cash account we know is a real account, and here we are receiving the cash. So for cash account it will be debit. Next, Ramesh is our personal account. Ramesh is the giver, so he will be credited. Now discount allow, we are allowing a discount, so it is an expense to us. This is our nominal account and nominal account expense is debited. Now here we have two debit entries and one credit entries. Let us see how to record this. This transaction took place on Jan 12, that is of Jan 12. Cash account debit, correct. Discount allowed account is also debited. To Ramesh's account. For how much rupees? That is important. How much rupees is important? See, cash received from Ramesh, how much we have received? 29,500 we are receiving. How much he had to actually pay? 30,000. What this means? 500 discount. Correct? Now how we will record it is, we know debit 500 discount we are giving. We are receiving 29,500. It should be always the total of this must be our credit entry, that is 30,000. So his account is settled. Being cash received from Ramesh 29,500 and allowed discount of rupees 500. So this is how the transaction is recorded. Next one, cartage paid 1,000. We are paying the cartage. Cartage is an expense and expense is debited. So cartage account debit to cash account. When did this transaction have taken place? We had to, okay, 18th January for 10,000 rupees. ₹10,000, Jan 18. So being cartage paid. Next entry, drew cash for personal use 5,000 rupees. We have read it in our previous video about drawings, and we know that when somebody is withdrawing money or goods from the cash, when the owner is taking out goods or cash from the business for his personal use, then it is termed as drawings. It is termed as drawings. Drawings are our personal account. Drawings are our personal account, and he is drawing cash. Cash account will come into consideration. Since drawing is a personal account, it will be debited because drawing is a personal account, because it is a account of Mudit. Mudit's drawing account. Cash is real account and it is going out of the business. So it will be credited. So let us record this transaction. It took place on Jan 20. Okay, this must be 18. Next, Jan 20. Drawings. Okay, Mudit's drawing account debit to, if he is withdrawing to cash or to goods. He is withdrawing cash, how much? 2,000. 2,000. 2,000. Being cash withdrawn for personal use. Next, last transaction, paid Sudhir, cash paid to Sudhir 26,700, discount allowed 30,000. Now, when did we had a transaction with Sudhir? So we had a transaction with Sudhir. Oh, we missed that transaction only. Transaction, we will record this transaction first. Goods purchased from Sudhir 27,000. So when here there is no mention of cash. So we can understand that it's a credit transaction. We will again do it on 20th itself. So here it is, we have purchasing goods from Sudhir. So purchase account is debited. Since it's an expense and expenses are debited to Sudhir's account because he is the giver for rupees 30,000, I suppose. 27,000. For rupees 27,000 and 27,000 being goods purchased from Sudhir. Now we are settling this account on January 30. How are we settling? Let us read this out transaction. So cash paid to Sudhir, we are paying the cashier 26,000 and 700 because we had to pay. This is our transaction with the Sudhir, which was of 27,000 rupees. Now we are paying him only 26,700. He is allowing us a discount. So let us note down what all accounts come into consideration. One is our cash account because we are paying it. Next is Sudhir's account because we are paying it to him, and we are receiving discount received account. Why discount received account? Because we are paying here the cash, and when we are paying the cash less than the actual cash, we are receiving that discount. So discount received. We know cash account is real account, and here we are paying the cash. Cash is going out of the business, so it is credited. Next, Sudhir's account we know is a personal account. He is the receiver, that is debited. Next, discount received is the income for the business because we are paying less than the actual amount, so we are retaining that amount. So it is a income for the business, which is a nominal account, and under nominal account incomes are credited. So this is how we have to record this transaction. Here Sudhir's account is debited. Sudhir's account debit to two credit entries we have, to cash account and to discount received account. We had to pay him total how much? 27,000. How much did we pay? 26,700. 300 discount we are getting. So it will be being cash paid to Sudhir, received discount $300. So here in this sum we came across two important transactions where we settled the account and understood how discount is to be recorded. So the total of our debit and credit is 4,87,500. Total $4,87,500. 4,87,500. This is our total. This is how we have to analyze the transaction from the business point of view and then record them into in our journal. So this is it for today's video. If you have any queries related to today's questions, you can post them into our comment section. We will solve them at earliest. If you feel our videos are informative, please go and hit the like button, subscribe to our channel and share with your friends. Until then, signing off. Happy learning.